Buying your first car is exciting, right up until you realize the affordable payment hides enough interest to finance a small moon base. First-time shoppers often get dazzled by shiny paint, sweet monthly payments, and dealership coffee. The truth, there are predictable traps, and knowing them could save you thousands. Number 12, chasing the monthly payment instead of the true price. Dealers love monthly payments, the way cats love cardboard boxes. They'll squeeze everything inside them. Extending a loan from 48 to 72 months can make a payment look manageable, but it also means paying interest for an extra 2 years and risking being upside down. In 2025, the average new car loan term is roughly 68 months, with used cars not far behind, basically 6 years tied to a depreciating asset. That's not inherently bad, but it's dangerous if your finances or lifestyle change before the car is paid off. Experian's 2025 reports show average auto loan interest rates around 6.7% for new cars and 11.9% for used, numbers that can quietly inflate what seemed like a reasonable deal. The fix is to negotiate the out-the-door price, car plus taxes and fees, rather than only the monthly payment. Get pre-approved at a bank or credit union so you know what interest rate you qualify for, and run the numbers with a loan calculator before signing. Your future self will thank you. Number 11, forgetting the real cost of ownership. Your car payment is just the cover charge. The real bill comes later. American Automobile Association latest Your Driving Cost study pegs the average annual cost to own and operate a new vehicle at about $12,297. That's over $1,000 a month once you add fuel or charging, insurance, maintenance, taxes, registration, and depreciation. Depreciation and financing alone eat huge chunks of your money. Insurance has also risen sharply. Consumer Reports notes many policyholders saw noticeable premium increases in 2024 to 2025. Younger drivers or anyone buying a sporty model can be hit especially hard. The smart move is to price insurance before you choose a car and to use American Automobile Association cost of ownership calculators so you're not blindsided. What looks affordable on paper may become a monthly budget nightmare once fuel and premiums show up. Number 10, ignoring market reality on prices and incentives. Car prices are not static. In August 2025, Kelley Blue Book reported an average transaction price of $49,077 for new vehicles, while JD Power estimated mid-40s depending on mix and incentives. That difference alone shows why timing and research matter. On top of that, incentives shift. The US federal $7,500 EV tax credit expired on October 1st, 2025, and analysts expect price adjustments and lease specials to follow as automakers react. If you're considering an EV, these market swings could mean thousands saved or lost. Shoppers should track prices for their chosen models for a few weeks, stay flexible on colors and options, and shop near month-end or model year changeovers when dealers often deal harder to hit sales goals. Number 9, letting add-ons and junk fees drain your wallet. Some fees, tax, title, registration are legitimate. Others, like paint protection or glass etching for hundreds of dollars, may offer little value. Edmunds advises asking for a written out-the-door quote so you see every charge. Regulatory efforts to clamp down on shady extras have been uneven. The FTC's 2023 CARS rule, designed to curb deceptive dealer practices, was vacated by a federal appeals court in early 2025, so protections now depend heavily on state laws. That means it's up to you to spot and reject padding. Always challenge fees you don't understand. Ask whether each charge is state mandated, lender required, or simply a dealership add-on. If the salesperson squirms, you have your answer. Number 8, skipping vehicle history and pre-purchase inspections. Buying used, trust, but verify. Vehicle history reports from Carfax or AutoCheck can reveal accidents, flood titles, and odometer rollbacks. Edmunds notes, Carfax tends to have more service record detail, while AutoCheck is cheaper if you're checking several cars. But the report isn't enough. Get an independent pre-purchase inspection. It usually costs $100 to $300, but can expose expensive hidden problems. NerdWallet and RepairPal both advise it because a single missed transmission issue could cost more than the car's profit margin. Finally, run the VIN through the National Highway Traffic Safety Administration recall tool to make sure you're not inheriting an unrepaired safety defect. It's free and quick. Number 7, underestimating depreciation and picking the wrong trim. New cars drop value fast. Kelley Blue Book estimates about 30% lost in the first 2 years and as much as 55% by year 5. Fancy launch colors or odd trims may may tank resale even harder. Electric vehicles are unpredictable right now. Some hold value well, others slide quickly due to shifting incentives and new tech. With the federal EV credit gone, used EV values may fluctuate even more. Research depreciation curves for any model you're considering. Favor popular colors, mainstream options, and trims with broad appeal. If you tend to change cars every 2 to 3 years, consider lightly used or certified pre-owned to avoid the steepest early losses. Number 6. Walking into the finance and insurance office unprepared. The F&I office is where many first-time buyers overspend. Extended warranties can provide peace of mind for unreliable brands, but many people pay too much for coverage they'll never use. Gap insurance, which covers the difference between what you owe and what insurance pays if your car is totaled, can be very smart if you financed with little down or chose a long loan term, but dealers often price Gap much higher than your regular insurer. Decide on warranty and Gap coverage before you sign, compare quotes outside the dealership, and be ready to say no to unnecessary extras. Nitrogen-filled tires rarely justify the markup. Number 5. Falling for yo-yo financing tricks. Some dealers use spot delivery. You drive off before the financing is finalized, only to get a call later saying the loan fell through and you must accept worse terms. Consumer watchdogs, including the FTC, have warned about this tactic for years. Avoid it by insisting financing be fully approved before you leave. If a dealer tries to renegotiate after you've taken the car, you can usually return it rather than accept higher rates. Number 4. Skipping a serious test drive. A 5-minute lap with the stereo humming won't reveal much. Drive at highway speeds and on rough pavement. Brake firmly, test parking visibility, and try every control and app. Bring a friend. 2 sets of eyes and ears catch more. If the car is used, test it cold as well as warm. Some problems vanish after warming up. Edmunds experts say thorough drives save buyers from tech glitches and expensive surprises. Number 3. Shopping without a short list. If your plan is I'll see what's out there, you're easy prey for upsells. Before visiting a dealer, narrow your search to 2 or 3 models and trims that fit your real budget, including ownership costs. Check crash ratings, reliability data, and depreciation patterns. Understand what manufacturers' suggested retail price, invoice price, and market value mean so you can negotiate intelligently rather than emotionally. Number 2. Treating new versus used as a moral choice. There's no right or wrong, only math. New cars carry higher sticker prices but warranties and the latest tech. Used cars can save up front but bring potential repairs, higher financing rates, and unpredictable insurance. Certified pre-owned sites in the middle, offering warranties and inspections at a premium over regular used. Edmunds and AP report many first-time buyers overspend on used cars by skipping inspections, ignoring interest rates, or rushing the test drive. Number 1. Forgetting safety and recalls. That panoramic roof and quad exhaust may look thrilling, but safety should be first. Always check crash test ratings on National Highway Traffic Safety Administration site and run a VIN recall check, especially on used cars. Many vehicles on lots still have open recalls. Spending 5 minutes here can save you from future repair hassles or worse. And that's it, your crash course in not crashing your budget on your first car. If this helped you dodge dealer tricks and save some serious cash, hit that like and don't forget to subscribe. Until next time, drive smart, buy wiser, and I'll see you in the next video.